Happy Wednesday, everyone. Welcome to another edition of #AskRobCo. Hope you're all well. James, how are you doing?
Yeah, good. Thanks, Rob. How are you?
Really good, thank you. It is absolutely freezing outside. There is literally snow everywhere. So I hope everyone is safe and well. This week it was my birthday and my mum called me up and says it always snows on your birthday, and it did. And it reminded me of when I was young, my dad was going to take me to Anfield, the home of football, to see Liverpool v Arsenal. And I woke up on my birthday and I looked outside and there was snow everywhere. And my mum said the game was off, and I cried the entire birthday. So not good birthday memories of snow, but hopefully everyone is well, and we will plow through the snow and plow on with the show. We have a little technical challenge this week. We didn't manage to get the new data and intel up for you, so I will talk it through and then I can email it to any of you afterwards, or we'll put it on next week's show. But the handouts you do have on the right hand side are last week's, and last week's we had a very special guest, one of the head top conveyancers and legals, Peter Ambrose, in the industry. So all of his data and intel is there, slide 4. We also shared last week some demand for new homes, slide 3. We had new homes purchases across 2020, slide 2. And we had last week's data and sales info, slide handout 1. So that's really good stuff. And if you didn't get it last week, I definitely suggest you have a look at it now. It was brilliant. And the show was also great. Peter and James were superb. So let's head straight into this week's data. So you won't have it. I'm using week 5, which is week commencing 8th of January, or 1st of February, should I say, sorry. And what I want to share with you is the new instructions. I said last week and the week before and the week before, we're seeing increments of new instructions coming on each week. We're talking about 10% more and more. So now in week 5, 2021, we've broken the 300 barrier. We're now at 321 new instructions, so around a 15% increase from last week. And I've been speaking to all the agents on the ground, and stock is coming on thick and fast, and that's going to continue through February, through into March, until lockdown 3 has ended, which we're probably looking at first week in March. Monday the 22nd, they're announcing what the timelines are going to be. We're expecting schools to go back on March the 8th, and we could then have restrictions dropped and lockdown could be over first or second week in March. That ties in with the new instruction volumes that are going up 10–15% week on week. And as I've just said, all the agents on the ground are telling us they're getting more valuations, more instructions. When we move on to the under offers, this week we hit 236, which is the highest under offers this year. And that also follows the trends of the new instructions. So the new instructions are coming on and going up every week. The properties going under offer are coming on, going up every week. The sold properties that have gone through are very, very steady and quite flat at the moment, all ranging between the 150 and the 180 figure, and this week is 158. So very, very small range of numbers for the sold numbers. I do expect that to increase. The challenge we have to get to exchange and completion is what we discussed last week, which is the supply chain within the industry. So you're doing your searches, your land registry, your conveyancing, your valuers, your banks, and your sanction, your credit teams to get your mortgage offer out. All of those timelines are drifting. And because they're taking so long, the average sale now is up to 8, 10, 12 weeks, whereas COVID and lockdown, you could easily get a deal through in 4 to 6 weeks, and the longest 8 weeks. So we've now shifted out to between 8 and 12 weeks, which means a lot of the deals are getting stuck in the system, hence the pressure on the stamp duty deadline, hence the reason why discussions are in place for maybe a continuation of that for a period to allow the funnel of deals to go through. So really interesting that instructions are up, under offers are up, sales are pretty constant. We do expect that to continue growing. There is buoyancy out there, even though we're in lockdown. And the second lockdown it finishes in 4 or 5 weeks time, I do expect those sales volumes to carry on going north. James, what are your comments on all of that?
Hi Rob, thank you for that. I think it's continued positivity and momentum we're seeing in the market. This is highlighted by the increase in the new instructions coming on, which again, positive news. And obviously we're active on the ground doing surveys every day, valuations. So we get that sort of anecdotal data from the agents, from word of mouth, and also the sort of direction on the sentiment on what's happening in the market. And those are the signals that we're getting on the ground. Again, some positivity in the rise in the number of under offer properties. There is a little bit of limited stock on the market currently, which again, we're hoping that continues to rise, that slow upward momentum, rather than the sort of we don't want sort of the boom bust up and down erratic sort of supply of property. We want slow and steady supply coming into the market, which again is very positive.
Yeah, I mean, just to focus on the final figures that came through for January, and if you look at the right-hand side, specifically for the prime fringes and super prime numbers, your 2, 3, 5, 10 million, the average so far this year, up until the first week in January, is broadly in line with what we saw in 2020. So on the right-hand side, so far the average, we're at 22 per week, 2 million plus, 11, 3 million plus, 5 million plus, and broadly we're close to actually 2 10 million plus sales on a weekly basis, which is in line and slightly over the average for the 10 million plus range. So we're very consistent with where the numbers were in 2020 and broadly in line with where the averages would have been in the previous years. And as I've just said, the first 5 weeks have been relatively slow compared to what we were seeing in November and January, November and December. And because of that, I think we can be quietly confident that the volume is going to increase, as I just said, because of the supply chain of properties coming on stream, going under offer, and then that moving into sales. So I think positive in that sense. James, what else you got for us?
Thanks, Rob. In terms of the wider market and the the things which are hot off the press, cladding again is particularly topical and has been in the last 3.5 years since the Grenfell Tower tragedy. And we know that the Housing Secretary, Robert Jenrick, is expected to promise the leaseholders who have been able to sell, to remortgage, to insure they've been saddled with extra costs of sort of night watchmen, the walking watchers at night if they're in an unsafe building, which has been increasing costs of service charges for those in leasehold blocks with flammable cladding. So they can't catch a break at the moment. They've got everything moving against them. The Housing Secretary, like we said, is expected to announce a $5 billion bailout to help the homeowners which are trapped in these flats, unable to sell, to help in the repair bill of these cladding, ill-cladded blocks. The repair bills, we know, these are averaging about 40,000 per leaseholder in all the blocks, so huge capital sum required. Now, 5 billion, it's unlikely that this will be able to cover the replacement of cladding for all blocks, which commentators are saying could reach about 15 billion in terms of those which are yet to be replaced. So in terms of the allocation of this 5 billion grant, it's expected the government will prioritise those buildings which are over 18 metres in height. So those smaller, those less high-rise buildings which still have cladding issues, those still could be problematic, and leaseholders could still be hit with large capital sums out of their own pocket to replace the cladding, which obviously is an issue across the market here in London and also in other cities in the UK. It's nationwide.
Yeah, I mean, every call at the moment I'm having with credit, with risk, with sanction, with all of the lenders is around everything to do with cladding, EWS1, structural warranties, certificates, or PI, insurance, etc. It's really challenging out there, and challenging both in the sense of all the scenarios that need to be looked at on every individual case, and the volume of cases that are coming through, and the market uncertainty because of COVID, and the market uncertainty because of Brexit, and pulling all of those together makes our jobs, both as valuers, as risk, as sales, as credit, as sanction, more and more difficult and unprecedented in my 28 years. Never has it been so challenging for a single case to get through when you're facing so many variables, so much uncertainty and so much volatility. Hence the need for as much data, as much intel, as much shared knowledge, as much shared information within the industry and the sector and the property market itself, so that we can all make better, more educated and more calculated decisions, and ultimately risk or sales decisions. So on that basis, James, maybe cover some of the points. We've had two brilliant guests the last few weeks. For those of you who have been here or haven't been here, touching on the build to rent specialism, touching a bit on care homes and lifestyle living, and also we had specialist conveyancer and legal. So we touched the heart of all of the industry at the moment. And James, you've got some other things to add on that.
Yeah, thanks, Rob. In terms of other market news, we know that we've commented on this during the course of Q3 and Q4 2020, that Lone Star has now completed its takeover of McCarthy and Stone, as shortened to McStone commonly. They've completed the acquisition at £647 million, slightly up on their original offer, 115p in the pound, 115 pence per share, up to 120 pence per share. As a result, McCarthy & Stone will now be delisted from the stock exchange. And we note that they've been a little bit troubled, McCarthy & Stone, in the period of 2020, particularly badly hit by COVID. Their completion numbers stood at 832 units last year, whereas in the previous period in 2019, this was at 2,400. So obviously they've been really affected by that. And Lone Star, just to tell you a little bit more about them, they're an American-based company who have a vast number of investments in the UK, including large exposure to the build-to-rent sector. Despite pulling out of a deal which we did focus on with Toby Nicholson a few weeks back, they pulled out this deal in December 2020 for the £3 billion acquisition of Quintain's Wembley Park, which, just to give you an oversight of that, is an 85-acre site, huge site. It's got planning permission for 8,000 rental homes. 1,500 of those have already been built. They've pulled out that deal at present. It could be something to watch this space. Later this year, the deal could reignite. So something there to keep watch of. But in the meantime, their acquisition of McCarthy & Stone gives them further inroads into the retirement living and assisted living space.
Excellent, James. Always track the Wembley project. One very close to home to me. It was the very first patch I started working in the industry 28 years ago, so very close to home. And obviously being next to Wembley Stadium, home of football, and all those great FA Cup finals that I'm very lucky to witness over the years. Going back to another point from Peter Ambrose last week and the timelines of the transactions, I just want to focus a bit more on that, because we're now seeing an uptake in volume that's coming to us on the ground as valuers. So already the pipeline is filling up from that position, from the valuation perspective. The agents have already told us that more and more stock is coming on. So that's going to work its way into the market, like we already said. Now, the conveyancers were already challenged to get the deals through. And last week we heard that if you wanted to get something through before the stamp duty window now, that's just not going to be possible unless the timelines or unless it's extended. So the conveyancing piece with searches, etc., isn't going to allow for that, and they're getting slower and slower and slower because of the pipeline and the volume. So we're seeing all of this, and it's just going to be really interesting, because if the buoyancy continues and the trends, what we're saying, do continue, we're going to be back where we were in October and November of last year, which is a buoyant market, which is arguably underpinning the UK economy, in the sense that it's one of the performing areas in the marketplace. So the residential market is performing. I know you've just shared some brilliant commercial investment activity at a very high level. At the same time, the residential market is really performing, very active. And if that does continue through 2020, it could be the driver that the government and the economy are going to need to help the UK post-Brexit and post-COVID when we come out of that. James.
Yeah, interesting times. Just in terms of some other pipeline news, development pipeline, and what's going on in the market. To bring you news of another developer, house builder, which is making inroads into the market, Strawberry Star, who've been involved in a number of developments in East London, to parts of Battersea and the Nine Elms regeneration. They've pledged and driven forward £500 million in 4 new schemes currently, in a ambition to deliver 4,000 new homes by 2025, all of which of those 4 sites are expected to include some build to rent elements as well. So just there seems to be a lot of momentum there behind the build to rent sector, and lots of different developers looking to get into that space and give themselves some exposure.
Excellent, James. Okay, let's just go through final points before we wrap up for today. We haven't touched on some commercial elements, and I just wanted to touch on that. So the office space is going to be interesting this year. We know that companies still can't make their decisions moving back in on going to work. Everyone's currently working from home. That's going to be watch this space Q1, where we'll start understanding some trends Q2, Q3, but it will still be predominantly working from home until further notice. So that's going to be under real pressure. Then we've got the, I suppose, the buy-to-let HMO investment space that some areas will perform really well, like we've mentioned previously. Your studios and your one beds, your lowest entry point, near working environments will perform well, and the HMO, which is the very lowest entry point, is really outperforming the rest of the investment market from that type of asset, with really good product and really good pricing. And we've also seen with mainstream lending, pricing is very attractive and very low at the moment, and we expect that to drive the market. Product and pricing is very important. Other areas, the retail high street, decimated in 2020. We're seeing Amazon looking for more premises for their distribution, and we discussed last mile logistics, which maybe might see vacant, empty buildings and units being taken up by Amazon in center of towns, so that they can get that last mile logistics distribution in action to get your fresh goods or your cold goods delivered to home within minutes. So watch this space. Any other trends or any other activity, commercially speaking, that we're going to be following over the coming weeks?
Yeah, thanks, Rob. Just to follow on from that, it's going to be very interesting, the sort of last mile and logistics. The barriers to entry to that market are huge. It's just going to be sort of watch this space. Are there going to be any new entrants to that market to challenge the likes of those Amazon, Ocado, some of the other delivery companies? Interesting one to watch. Just to bring you some news as well on a commercial deal, London and Oxford have acquired a £128 million office opposite the Bank of England, a share of confidence in the square mile in the City of London. Just to bring you that deal, which I believe completed yesterday. If you want any further intel on that, drop me an email, please. In terms of further trends though, Rob, again, in terms of those sort of planning now for the different trends, are we going to see some more out of town retail parks, some more sort of flexible working space offerings? It's going to be a year of adjustment and adapting, I think, 2021.
Absolutely. Last question for the day, and it's something I've been doing some lecturing at the universities lately, and the students were asking me, what are the opportunities and what are the big changes we think we're going to see in 2021? And they were like a bit nervous and a bit concerned and tiny bit downbeat about their job opportunities, maybe coming in as graduates, and what the future would hold. And my viewpoint is, from my experience, that your ERMs in the early 90s, your crash then, your dot-com boom, your Lehman's, your Brexit, they all create opportunity, as COVID will, and whatever we're going to see moving forward, whether that's in the technology space, whether that's innovation, whether that's intel and data, or what we're providing here. I think for the next generation of real estate professional, or the industry in general, whether you're in banking or finance or lending and sales, I think it's an incredibly exciting time, and I think the opportunities are going to be abundant. What are your thoughts, James?
Yeah, I think it's again, it's an interesting time. It's very uncertain. I think the sort of volume of jobs, the kind of allocation of, say, the top 4 each offering 20 graduate places per year, I mean, that could reduce slightly, but I think for those candidates which are very motivated, they're able to communicate effectively, especially where interviews and communication is going to be online. It's going to be video like this. Communication is going to be absolutely key, and also they're going to have to be really self-motivated, get themselves out there and really kind of push the opportunities themselves. But like you say, where there's that willingness and motivation, I think there's always opportunities for great candidates.
Like we heard last week from the conveyance and legal side, they were receiving double the amount of applications and interests to proceed with transactions. So where you've got double the volume of transaction happening, that requires bankers, finance, credit, mortgages, valuers, agents, administrators, management. The whole supply chain within the industry requires more people to do all the roles and jobs that are required. And like we heard last week, there aren't enough people that are willing either to move or do that at uncertain times, which is why the time delays are coming in from credit, from sanction, from the valuers, from the conveyancers, from the agents, because they don't have enough people to cope with the volumes when we've hit 15-year highs in mortgage approvals and transactional volume going through, like we did Q3, Q4. If that continues this year, that's an opportunity for graduates and for young people in the industry, and hopefully they can look at it positively. And hopefully 2021, when we get out of lockdown in 4 or 5 weeks time and the weather gets better, we can have a good year, much better than last year, and move on. So that's my piece for today. Let's be positive. Let's get through the last bit of lockdown. We will keep sharing all of the data, all of the intel, answer all of your questions every week across all the platforms. And thank you all for supporting everything we're doing or trying to do for you in the industry. I'm really grateful for that. James, thanks for your input once again. It's great. Thanks everyone for watching, listening, or rewatching or re-listening. And thanks for all your messages of support. Very much appreciate it. Have a great week, everyone. We will see you next week, and hopefully we've got a special guest lined up. Take care, everyone, and we will see you next week.
Thanks very much, everyone.